Good afternoon, everyone. This is Sam Thakkar, joining from a weekly webinar on a variety of topics today. I'm a group CEO of Perfect Group of Companies, and I appreciate everyone joining us live. We are going to get started in about less than 2 minutes. And again, I really appreciate everyone joining this afternoon to understand that what are the new changes and how does it advantage everyone, and what are the tax planning opportunities that the variety of things that has happened or care sector has brought creates for business owners and small business owners. So that is the primary intention of today's topic. So we would again get started in 2 minutes. I'll share my screen. I hope everyone is able to see the screen. So we have a Q&A. We have a Q&A window where you can ask any questions if you want to. And at the same time, we also have chat option where you can also request any questions you have. Hope everyone is able to hear me. A little bit of background about what I do and what is my role. My name is Sam Thakkar, and my role with the Perfect Group of Company, I'm a group CEO, and I work with different divisions of the business of Perfect Group of Companies. Vaishali Thakkar, who is the CEO of Perfect Tax, Perfect Capital, and Funasia Radio in Dallas. So I work with her very closely in discussing and formulating different ideas and strategies which can help our community members maximize and take value addition advantage to maximize their value. Again, I really appreciate everyone joining. And today's topic we're going to discuss is two different topics. In first half of the session, we're going to talk about CARES Act, planning opportunities, and other planning ideas. And in the second part of the session, we are going to predominantly discuss about the opportunities lying with Perfect Capital, that how Perfect Capital can help you fund some of those things, and what is the best way to fund some of the ideas and strategies for growing your business. So, a little bit of background. Perfect Group of Companies and Perfect Tax has been in business more than 20 years now. We started as a home office firm, and over the years, we have grown as a fully diversified planning firm, capital raising firm, and media and marketing firm. We are one of the world's largest South Asian media and marketing firm, targeting and connecting South Asian consumers to the small business owners. We have multiple different media and entertainment companies like Funasia, Fun Movie Grill, and we also have another entities like Big FM and Love FM and Beat FM, which are part of UAE. So we now have over 10 radio channels across the world, which focuses on media and entertainment side. Our tax and consulting side of the business, we now have ability to help small business expand into UAE space. We can provide you with opening a company in UAE. We can also provide Perfect Tax and Perfect Capital can also help you comply with the local laws of UAE, and also help you how you can expand into UAE market. We have very good lobbying firm as well, where we have good connectivity with government. So if your products or services as a business target any government regulatory bodies in UAE, we can help you expand your footprint in UAE market space as well. We have now offices in Philippines, New York, US. In US we have New York and Dallas, and we have international markets. We have Philippines, UAE, Dubai, and India. So we can technically help you with global tax planning and global growth if you want to grow your business into any of these countries as well. So getting started for today's presentation, goal is what can we do? A lot of people have heard about variety of programs that were created which as part of CARES Act, like Triple P and EIDL and MSLP, where government was helping, but a lot of people have not paid attention to lesser known planning ideas and strategies which have added phenomenal value for all the businesses. We also have, I'm sorry, I think I forgot to mention, we also have an office in California, Los Angeles as well. Well, thanks for my team for reminding me. Sometimes when you're growing too fast, too much, it's easy to forget a location. But again, we can technically handle complexity of any client which has global, anywhere in the country or anywhere in the world, global expansion, global, tax impact, and global tax planning, areas. So a little bit of background. CARES Act now allows taxpayers to carry back NOL for 5 years. A lot of people who don't know what NOL is, NOL stands for net operating loss. Typically, net operating loss was allowed to carry forward, and they were allowed to carry forward almost indefinitely, almost 20 years. So what that means is if your business has a loss and you are not able to offset that income or loss against your other income, you are allowed to carry forward that loss, and you technically can reduce your future tax liability using that. As part of CARES Act, what they've really done is that you can technically go back and amend your 2018, 2019, and 2020 tax return, and you can go ahead and take your NOL back to 5 years. What that really means is there are certain other changes they have made as part of 2018 laws. So earlier, if you were a small business and you did any renovation effort or you did any modification, particularly restaurants, if you're building a restaurant or you build a construction on a leasehold improvement property, the depreciation was depreciated over span of 25 years, where you had to write off your expenses and losses over 25 years. But they have modified that law, and now you are able to deduct 100% of that deduction in that year itself. So if you had done any capital investment since 2017, 2018, 2019, and 2020, my recommendation is to talk to our team. You might be able to go back and amend your tax return and accelerate your depreciation in those years, which is 2017, 18, 19, and 20. And not only that, if you have money coming back, you can technically get extra refund from year 2017, 18, 19, and 20. But due to this NOL change, if you have losses that exceed, because of this depreciation claiming, that exceed your income, you can not only claim refund from 2018, you can go back 5 years. So you can almost claim refund from your 2013, 14, 15, 16, 17 years if you are not able to claim those losses in 2018 or 2019 or 2020. So that is a very, very powerful planning strategy right there, where you are able to get some liquidity back from your last few years and technically use it for growing your business without any restriction, and also possibly sustaining your business through these challenging times. So the primary goal of CARES Act was to get cash quickly into hands of taxpayers who are impacted by COVID-19. Who can utilize NOLs? NOLs could be utilized by individuals, C corporations, estates and trusts, tax-exempt organizations, filing Form 990, or exempt business organizations. Somebody who has just recently joined, through this presentation, we have divided this presentation in two different parts. First part is the planning part. The second part is the how to get free government money to grow your business. And anybody has any questions, feel free to click Q&A section and ask questions, or click on the chat session and ask questions. Again, my name is Sam Thakkar. I'm Group CEO of Perfect Group of Companies. And today we are going to discuss about planning opportunities and the opportunities of how you can raise capital from government in this challenging time. To give everyone an idea, Perfect Group of Companies has been in business, again, more than 20 years, and originally started by Mr. Mahesh Thakkar, who is the chairman of the company, and Vaishali Thakkar, who is the CEO of Perfect Tax and Perfect Capital, and me as a group CEO of the entire group of companies, which includes Fun Asia, Fun Movie Grill, Fun Pizza Kitchen, Big FM, Beat FM, and Love FM in UAE, and Perfect Tax and Perfect Capital and Thakkar Developers as a group of entities. We have 25 businesses under which our group is divided, with more than 400 employees. We are structured and designed to help clients proactively maximize their value from government programs and government planning saving ideas, including tax savings and including any incentive programs of government and SBA programs. Who can utilize NOL? We were discussing earlier NOL. NOL stands for net operating loss. So if your business has a net operating loss arising from, so example, if you bought a real estate this year, and if you were able to depreciate that real estate, majority real estate this year, or Real estate typically is depreciable about 25 years. So can you technically segregate the cost? Example, your air conditioning, your furniture and fixture, your windows, your cables, your powers, your electric cables could be all segregated. Your signage, building signage could be all segregated to generate additional deduction in first year itself under bonus depreciation laws, which could convert generating more expenses and losses. And those expenses and losses, we call them, if your losses exceeds depreciation losses or other losses exceed your profits, then that converts to an NOL, which stands for net operating loss. This net operating loss you are allowed to today, in previous to COVID and CARES Act, you were allowed to carry it forward. But this NOL now allows you to carry back these losses for 5 years and take advantage of these losses over the last 5 years. And this is applicable for 18, 19, and 20. Who can utilize NOLs? As I told you again, individuals, corporations, individuals, C corporations, LLCs, sole proprietors, estates and trusts, tax exempt organizations who are filing 990T, and exempt business organization. How can NOL help? As I told you earlier, NOL carryback presents an opportunity to secure permanent tax reduction opportunity by using losses to offset income generated prior to tax reform. So when the tax rates were higher, earlier the tax rates were 39%. You might have paid a lot of taxes. You are allowed under NOL to carry back those NOL losses for 5 years and get refund back for last 5 years. That's very, very powerful. NOL from tax year where tax rate was higher now can be carried back to offset income from tax year that was lower within 5-year allocated period. So tax advisor can take a close look at tax variation to figure out best strategy to lower your overall tax scenario. So your tax advisor should play a role here to take a very close look of this variation and to figure out the best strategy to lower your overall tax, because each tax scenario is different. So my strong recommendation is for a lot of clients who have not taken this opportunity to set up a meeting with our team. Our team can technically help you see that what is the maximum mechanism you can use to take an NOL and carry back your losses for prior 5 years and take advantage of it. Advantages under CARES Act. First advantage, I think we just talked, 5-year NOL carryback for losses generated in 2018, 2019, and 2020 tax years. Apply 50% of adjustable tax income limit instead of 30% ATI in computing business interest limitations for 2019 and 2020. Earlier, there was a business interest tax deduction limitation. So your business interest was maximum deductible up to 30%, but now they have made that adjustment retroactively for 18 and 19 and 20 to allow that up to 50%. So your 30% limit has gone up to 50%. So annual limitation of the deduction of an NOL of 80% of taxable income is suspended until 2021. So you are able to deduct 100%. So earlier, even if you were to technically, if you were carrying forward a net operating loss in future years, there was a limitation that you can only reduce up to 80% of taxable income, but now they allow up to 100% until 2021. So if you had NOL, you are able to deduct maximum and take advantage of it. It also suspended the limitation for non-corporate taxpayers on the deductibility of excess business losses until 2021. There were limitations which were stopping non-corporate taxpayers on the deductibility of excess business loss, but now they have removed that also. Apply 100% bonus depreciation to qualified improvement plan placed in service retroactive for 2018 or 2019. What do I mean by this? This is very important. So if you had put an improvement or a real estate in 2018 and 19, you were allowed to only carry forward these losses and you were able to depreciate over 25 years. Depends on the class of your asset. Now, with this recent CARES Act change, you are able to take qualified improvement plans. So if you have technically built a new restaurant, build your office, build anything, either it could be a leasehold improvement or either it could be a ground up construction. We can use In ground up construction, we can use things like cost segregation studies, which can maximize your depreciation. So instead of taking depreciation over 25 years, by using cost segregation study, there could be potential. We need licensed architect, engineers, and due to our experience with real estate, we are able to technically take advantage of some of this law to the maximum extent. Under qualified improvement plan, and if your product or if your real estate is placed in service for 2018 and 19, you are able to take advantage of that and take 100% qualified improvement, bonus depreciation for 100% qualified improvement, and you can then apply rules of NOL if you are not able to take full advantage of that, or you are not able to take advantage in future years. So options for claiming NOL refund. You would need to file an 1120 return or a 1065 return. You will have to file additional required forms to get the maximum advantage of NOL. What are the other planning ideas? A lot of people ask me this question. Today, more and more people are now working from home. You are able to take your and maximize your home office deduction. There are strategies available where even though you might be occupying only 10% of your home, which could allow you to maximize your deduction for your home office up to 50%. Anyone has a question, please feel free to just type your questions in Q&A window so we can clearly try to repeat. I would repeat the question for everyone to answer and also try to answer that question live. And you can do that on chat window as well. Coming back to, I will continue this thing and we would hope Alan writes a question so we can technically, hopefully answer that question for him. So in addition to other planning ideas, in addition, CARES Act generally removes the 10% penalty on early withdrawal from retirement accounts. So you now have a special incentive. So if a withdrawal is coronavirus related, it gives employers a temporary incentive to help employees pay down their student loans and provide certain favorable rules for 2020 cash charitable contribution, among other things. So you are now able to withdraw the money, out of your 401k account or the, or the account that is related to IRA account, any kind of retirement plan account, you're able to withdraw the money without the 10% penalty. If anyone wants to set up a one-on-one consultation, please note down our numbers. Our experts are available. And after our number also, I'll share you two numbers, 469-213-1519. And our team of experts are available to answer your question through this session or after the session as well. And after hours number is 214-576-6439, where you can text or you can call and some expert, Lee, would technically help you. Again, the number is 469-213-1519 or the number is 214-576-6439. So coming back to the presentation, there are rules which allows you to withdraw money out of your 401k without the 10% penalty. And if you want to avoid taxes, you can repay this money in 2021 and 2022 to avoid any tax payment as well. Employer retention credit. CARES Act added a refundable payroll tax credit equal to 50% of qualified wages. Wages including qualified health plans, allocable to the wages paid by employers from March 13, 2020 to December 13, 2020. So if you have, employees, you are actually able to take some benefit of refundable payroll tax credit equal to 50% of qualified wages. Wages include qualified health insurance plan expense also. The biggest thing that you have to prove is that your operation was fully or partially suspended due to COVID-19 related shutdown if you own a business. Your gross receipt declined for more than 50% when compared with the same quarter in the prior year. That is what allows you to technically take benefit of this employee retention credit. Employer retention credit, if the employer has more than 100 employees, qualified wages will include only wages paid to employees who are not working as a result of COVID-19 related shutdown order or the significant decline in gross receipts. For employers with 100 or fewer employees, qualified wages paid during the period when the operations were fully or partially suspended, or during a quarter in which gross receipts have significantly declined, are eligible for this tax credit. And this is a refundable tax credit. So remember this thing. Credit is limited to the first $10,000 of qualified wages. So you are able to take the tax credit on this qualified wages for Social Security and Medicare portion. Credit is not available for wages taken into account in computing the sick leave or family FMLA leave or FFCRA, which is the first Coronavirus Response Act. Credit is also not available to employers who have received a small business interruption loan under PBB. But if you're not taken PBB loan, then you are eligible for this tax credit, and this is a refundable tax credit. Charitable planning deduction and expense. So charitable planning deduction, 100% of charitable contribution in 2020 is deductible to public charity. So if you have charitable planning expense, you are now able to deduct 100% of this expense technically to your advantage. You are able to take 100% of this expense towards your advantage, and technically you are able to take benefit of this. So earlier, the maximum deduction that was allowable or available was only up to the maximum limit of 60% on the charitable deduction. But now with this new law change, you are able to deduct up to 100% of this thing. So if someone is not aware where they should technically, contribute the money to, I always recommend that your simplest bet would be is that you technically put the money into donor advised fund, and you technically take advantage of donor advised fund where you don't know where the contribution should go to, but you are able to take advantage of the benefit, and you are able to take advantage of this thing. So now I want to switch a little bit of gears. I want to switch gears to our second part of the presentation. Again, I would like to, before we jump into the second part of the presentation, I would like for people to see that if they have any questions related to today's presentation and what they can do. There are other planning ideas and strategies beyond the CARES Act planning ideas and strategies. Example, you can invest into solar energy tax credits. You still have this year 26% tax credit available. So which would allow you to technically deduct 26% of your solar and tax credits and get the tax energy credits available to you. The tax energy credit is again a very powerful opportunity where you are able to take and maximize your benefit, and you are able to take advantage, including depreciation and tax credits. We also have ancillary ideas and strategies where we can, if you feel that your income is lower this year, we can prepone your income from next year, which could be a normal income, to this year, and take advantage of it. There are other strategies like charitable planning strategies where you can take, being W-2 owner or W-2 filer or a business owner or filer, you are able to take advantage of those charitable planning strategies to maximize your savings again. As we go through this presentation, I'm going to change a little bit of gears, and I'm going to talk about what you can do to take advantage of some of the opportunities that are available through government programs to maximize value for yourself. Hope everyone is able to see my screen. So CARES Act, everyone knows, was introduced in April 30, 2020. Part of this presentation's purpose is that what are the programs that are available in the CARES Act, technically, which would allow individuals to take advantage of the CARES Act program. There were 3 different programs to create liquidity created by government. One was PPP, which was called Paycheck Protection Program. There was EIDL, which was Emergency Disaster Loan Program. There was a MSLP, which is called Main Street Lending Program. PPP was purely based on any business technically who was affected and has employees, including self-employed professionals or business owners. They were able to get PPP money and it had a forgiveness feature which allow you to make this loan a forgivable loan. For people who technically had participated in this program, today this program has ran out of money, means it has money, but it is only available for the first time applicable, business owners who is applying for triple P. But business owners who have not applied for triple P are still eligible, business, and they have still funds available. Business owners who have already applied for triple P, there is a conversation going on in Capitol Hill to come out with a new stimulus and allow an additional funds available for triple P as well. Eligible borrowers under Main Street Lending Program. Main Street Lending Program is another program where Federal Reserve created a lending facility for up to $600 billion. And this program is available to December 2020. It allows business owners to technically get the loan program available up to 6 times EBITDA. Minimum is 250K all the way to $300 million. And this program is divided into 3 different programs called NLF, Main Street Lending New Loan Facility, MSPLF, which is Main Street Lending Priority Loan Facility, and MSELF, which is called Main Street Lending Expanded Loan Facility. The different loan types, now this limit has been changed from 500K to 250K, and the higher limit has been changed now to $25 million to $35 million, and $200 million to $300 million. The repayment term recently has been changed from 4 years to 5 years. And the interest deferment now is for 2 years. The capital payment and the interest deferment is for 1 year. The principal payment is deferred for 2 years. What is the key difference between PPP and Main Street Lending Program? PPP was established by CARES Act and implemented by Small Business Administration versus Main Street Lending Program is implemented by Federal Reserve using Boston Federal Reserve. The PPP program was having a forgiveness feature. So if you were to use this money for proper allowable use, you can make this loan a forgivable loan. Versus Main Street Lending Program, the forgiveness feature was not there. Payment deferral. In PPP, PPP, the payment deferral is for 6 months. Then there is a payment deferral. Then there is a payment you have to make, and the interest rates are low, 1%. If the loan is not forgiven, and you have technically initial loans for 2 years, now the loans are 5 years. Versus Main Street Lending Program today, the loans are allowable up to 5 years with repayment starting at the end of third year and interest payment starting in the second year. So my strong recommendation today is, I appreciate everyone joining this presentation today afternoon. I think there's a quick question and answer. Let's see if we can answer that question. There's some technical difficulty I'm trying to find. So there's a question that we have a small business with around 3 employees, but we have been declined twice for SBA. Even we were first time. Any ideas that what we can do? Reason was growth was not as far as last year. I think you are mentioning about your EIDL loan. Your EIDL loan technically might have been rejected. So my recommendation is there is a way for us to appeal this rejection. My recommendation is for you to talk to us and discuss with us. We can technically try to create an appeal and see EIDL is still open. Today, Triple P has, the deadline was 8th of this month. So anybody who has applied before 8th, we can still help them if they have been rejected or if they need any help. Our last case for this previous stimulus we took on was on the 8th of this month, on August. But my recommendation is for the EIDL loan, if you have been rejected, please talk to us. There is a way to appeal, and with the appeal process, we can try to get you that money back for you. I hope I was able to answer that question for you. All right, again, I appreciate everyone joining. If you want to ask questions, this is a great time. Please do ask questions. If not, what we would do is, we would still be available. My email address is sam@perfectx.com. You can send emails to salesteam@perfectx.com, or you can answer the question call by getting 469-213-1519, and our team of experts would be able to help you. In the after hours, you can technically call 214-576-6439. Again, everyone, I appreciate you joining in this afternoon. This is Sam Tucker signing off today afternoon to discussing variety of programs. Next week, we'll be discussing the solar energy tax credits and charitable planning strategies. On Saturday, how you can technically take advantage to, and you can leave a sizable portion, how you can use a donor advised fund, how you can build a charitable remainder trust to avoid capital gains tax. This might be a great time for thinking about capital gains tax, because very soon, if Biden wins, we have been hearing that the capital gains tax rate for high income earners would go to 40%. So if you're in California, your tax rates might go all the way to 53%. Again, thank you everyone for joining this afternoon with me and our team, and we appreciate everyone joining. What are your charges for personal returns? We are very cost effective for personal tax returns. Our personal tax returns runs anywhere in range of $150 to $250. And if you're first time filing tax returns with us, and if your income exceeds 250K, we give you first year absolute free return without any requirements to sign up for any advanced services. So again, I appreciate everyone joining. I would like to remind everyone one more thing. Business returns typically run anywhere in range of, business returns runs in anywhere in range of, $250 all the way to, $5,000. Depends on the complexity, depends on what kind of return you have, what kind of revenues you have, and all those things, and what kind of books you maintain. My recommendation today afternoon is anyone who has joined today, we would have your name. We are celebrating India's Independence Day in a drive-in movie theater in Irving. I invite everyone to join us in our drive-in movie theater in Irving today evening from 8 o'clock. There is a food you can order from inside. There is a live singing. We will be singing national anthem. There is live music. And then we'll be watching Lagan movie after that in drive-in. And normally the entrance to the ticket for this is $30. But for anyone who has attended this webinar and are interested, please drop your email to salesteam@perfectx.com, and we will put your name into a guest invite list of perfect group of companies, and you'll be able to attend this in your car, and you can bring as many people as you want in your car, and with the social distancing, enjoy and celebrate India's Independence Day in our fun movie grill theater in Irving. Again, I appreciate everyone joining this afternoon, and look forward to work with you guys and see that how possibly our team can help you get more money from government. And at the same time, we can also try to help you, get some of this tax incentive. You can also drop an email to sales@perfectx.com or salesteam@perfectx.com or info@perfectx.com. I appreciate everyone joining. Look forward to see you guys in Irving. We are celebrating with a social distancing and with mask, the responsible way of enjoying and celebrating India's Independence Day today evening. And you guys are invited to join this thing, and you will not pay the $30 entrance. Please let us know. If you are interested, drop an email or call us 469-213-1519. We will have you on our guest list, and we will technically see you guys. Look forward to see you in today evening at 8 o'clock in parking lot of Fun Movie Grill, and enjoy the movie Lagan with the drive-in theater concept. Thank you very much. I appreciate. We're the first in-city drive-in concept in Dallas. Thank you very much.